President Trump's recent decision to double tariffs on Canadian steel and aluminum imports to 50% has significantly intensified the trade tensions between the United States and Canada. This dramatic move follows Ontario's controversial decision to impose a 25% surcharge on electricity exports to the U.S., impacting states like New York, Michigan, and Minnesota. The immediate repercussions of these heightened tariffs are profound for both countries, but particularly for Canada's economy, which heavily relies on trade with its southern neighbor. Canadian steel and aluminum industries, already strained from previous tariffs, now face potentially devastating economic challenges. Analysts forecast severe disruptions, factory closures, and considerable job losses in these critical sectors. Financial markets have reacted swiftly and negatively. The Dow Jones Industrial Average plummeted nearly 600 points following the announcement, continuing a troubling trend after a 900-point drop the previous day. Investors' concerns center on the heightened risk of a recession sparked by the escalating trade war. The Bank for International Settlements has issued warnings about the global economic instability these tariff measures might provoke, highlighting fears that Trump's aggressive trade strategy may derail the fragile global recovery. In Canada, the response has been equally strong. Prime Minister Trudeau's administration swiftly retaliated by imposing tariffs on $30 billion worth of American goods, targeting strategically chosen products to maximize political and economic pressure. Items such as agricultural products, automobiles, consumer goods, and certain tech products are included, impacting states that are politically important in the U.S. Additionally, Canada has made clear its intention to escalate further if necessary, with potential tariffs expanding to $125 billion of U.S. imports if negotiations remain unproductive. Ontario Premier Doug Ford has publicly condemned Trump's tariffs, blaming them for risking recessionary pressures on both sides of the border. Ford emphasized that Canada's stance remains firm, reflecting a growing frustration among Canadian policymakers who see the Trump administration's latest tariffs as an unjustified escalation. Economists in Canada are sounding alarms about the broader implications. Forecasts suggest Canada could enter a recession as soon as the second quarter of 2025, with unemployment rates projected to climb from the current 6.6% to approximately 8%. The automotive industry is especially vulnerable, given its heavy dependence on cross-border trade and integrated supply chains. Major automakers have indicated potential layoffs and production cutbacks, further intensifying economic anxieties. Ontario's recent decision to impose a 25% surcharge on electricity exports to the U.S., the initial trigger for Trump's tariff increase, has highlighted deeper underlying tensions between the two economic allies. This surcharge particularly impacts energy-reliant U.S. states such as New York, Michigan, and Minnesota, fueling a regional economic confrontation that could have lasting repercussions. The Bank of Canada's governor, Tiff Macklem, has indicated the possibility of further interest rate cuts to cushion Canada's economy against escalating trade pressures. However, experts warn that monetary policy alone may not be sufficient to mitigate the full economic fallout of an extended trade war. Both countries now face an uncertain economic future as businesses and consumers brace for higher costs, reduced trade flows, and potential recessionary impacts. While negotiations remain possible, the current trajectory suggests heightened tensions and economic disruption will persist unless significant diplomatic progress is made.